Hi guys, welcome back. So recently I got a YouTube comment, actually I think it was 2 days ago, and I thought, you know what, let's just make a video. It's quite a detailed comment. I'm going to read out the comment to you now. And the comment is, if I opened an offshore trust in Nevis and had a business in the US making $20,000 a month, owned by a Nevis trust, and then had Nevis companies doing services for the US company so I can then lower the actual tax. Then send that money into the Nevis trust out of the Nevis LLC. Then into a whole life insurance policy. I don't own anything. The trust owns it all. Can this save taxes and grow my money and help me protect my assets, or is this illegal, right? Basically, what can I add or take away to this actual comment? So again, brilliant question there, completely brilliant question. Now, when I just read this, it's not a 0% tax hack, firstly. I mean, firstly speaking, it's where you live, personally. If you're living in a very favourable tax jurisdiction, obviously things are a lot more easier to set up. But if you're living in the likes of the US or have a US passport, then things are vastly different, right? So I don't know where this client's actually living, right? So just having a morning coffee, reading through this. But essentially today, I'm going to break this down calmly and go over what you could potentially do, how this could actually work, and again, what works, what doesn't, and where the line is between, illegal activities, illicit actual activities, and planning effectively for asset protection and minimizing your taxes legally. So, it can be done properly, and there's a way to do that. And if it's the first time ever see me today, I'm Will from HPT Group. You can find out more information down below. We help clients relocate around the world, move their businesses around the world, help with asset protection strategies, Plan B citizenships, as well as other services as well, such as EMI, fintech licensing, and also crypto solutions as well. So quick disclaimer as well, this is education for educational purposes only. If you do obviously want individual tax advice, I would advise you to go to those legal counterparties that you should be doing so. But again, what the commenter was proposing here was a Nevis trust, a US operating business, and a Nevis service-based company to essentially extract cash out of that US company to then lower those taxes. Now then the Nevis trust would in turn actually, have the life insurance policy wrapped around it. So the three main goals around this comment would be tax efficiency, asset protection, and obviously investment growth, because you're able to grow your assets at a much more sustainable rate without those taxes right there. So putting those profits into a structure where they can completely grow and the chest can grow is obviously very favourable around the world. Now, why it doesn't actually erase those US taxes is a very interesting topic. So what I am replying and says it's a very individual case-by-case circumstance, and obviously if you want a consultation, you can have a free consultation with me down below. But let's assume the worst case scenario, right? And we're actually thinking about here that it's a US tax perspective, and the person behind the actual comment is a US tax resident. Now, if he or she is an American living in the US, running a US business, making economic choices from the US, the US tax code is I'm sure it wouldn't even fit in new JP Morgan's office. It's ridiculous. It's absolutely huge, But there are concepts that are important that potentially could be doing that. Now, just because you have a business in the US, yes, it can mean you can remove your taxes or minimize them. But if you're a US resident, then with US substance and US operations, this now becomes a completely different story, okay? So let's say the US company, as the guy mentioned, it's 20K a month. Let's go back to the comment here. Now, the fact its shares would be potentially held by the Nevis Trust or the Nevis Holding Company doesn't mean suddenly the taxes have gone away. Again, it doesn't mean that it's Nevis income, right? You're still earning that money in the US. Its country of origin is in the US. Let's say the substance in the US, and you're a tax resident in the actual US. Now, you would essentially be charging fake invoices, right? And that's a giant red flag. You cannot be doing that, simply speaking. So there are concepts such as transfer pricing, related party transactions, and obviously this is where economic substance potentially could come in. It gets a little bit complicated, and that's why we speak with our clients one-on-one for all these complex issues. You know, you can have royalties, IP, maybe the domain is owned by this company over here. But again, it's a huge red flag. So in reply to your comment, essentially, it's very individual, but most likely you would be a US tax resident, potentially a US citizen, and you have your economic substance in the US for that company as well. Therefore, I would not be doing that one myself. It comes through as a sham transaction. So very important, And the life insurance wrapper that you were on about doesn't actually fix this poor structuring, right? Now, ideally speaking, potentially you'd look at renouncing your US passport, moving abroad to a tax favorable location, and then restructuring yourself from that as a settler from there, where potentially you can obviously look at a great structure that can then protect your assets and again, remove your taxation, and also you're living in an area that's much more favorable towards your personal taxation as well. That is my comment to do. And that's what we advise most of our clients. If you're living in the UK, then literally get out the bloody UK. It makes no sense to be there right now for me as an entrepreneur, no sense at all. The same as we've seen with the Netherlands, France, Germany. Italy, we've seen an interesting regime come in, the same as Greece, where you have a potential flat tax. But, we've got so many havens around the world. I wouldn't say Dubai is a tax haven, but it could be a great place to live, especially for, 160 to 200 days a year. It's in the middle of the world. If your business is in Europe, US, Asia Pacific, then it could be a great place for you to actually be moving to and have your base, your personal taxation, and your TRC, your tax residency certificate, right? So putting things all together, okay, it has to be, a legit structure, and there's reason and substance behind that, That is what is key here, okay? So Nevis trusts are not illegal, nor is the holding company. But what you're suggesting would be just doing essentially a sham transaction. There is no substance, there's no real meaning behind that transaction, right? And essentially that would be, I guess, tax evasion and illicit way of structuring, an illicit way of doing things. And again, that's why we help clients. We basically actually tell them what not to do, more than what to do. But if tax is your main thing, then leave the country that you're paying tax in. It's very simple. So, the way that you've described that comment and that structure that you made in the comment, it is very likely to be attacked. It wouldn't be my choice of doing things. But again, especially if you're a US tax resident, that would definitely be attacked, right, by the IRS and the parties over there. So you can have a similar structure that could work out pretty good. Now, if it was a real services company with substance, that changes things completely. We can go into this in detail if you do just book a meeting with me down below. Now, if you're not a US resident and your business has no substance, it's just an online services company doing $20,000 US a month, the story completely changes, right? So, and the life insurance policy that you actually briefly mentioned there is, it's a wealth plan, not a structuring cover-up. That is what is key there, and it looks like you're using it to cover up the actual structure. So asset protection is usually done early and done properly. And again, you've seen me mention in all of these videos, Cook Islands, Nevis, foreign bank accounts, all of this. And essentially, we need to start with understanding your tax residency. And then if it's in a location where we're pretty much very limited to do things, then essentially we would have to look at moving, just relocating you to a place that's much more actually favorable, where your personal income tax is much lower, and again, potentially there's more relaxation on the ownership of foreign companies, for example, X, Y, Z. So hopefully that answers the question, and also for you other gentlemen and ladies watching, then it's a good little piece of information of how we work, what we do, and again, if you did actually want to work with us, You have the links down below. I've mentioned it enough times. Enough of that, guys. I'll see you in the next video. Cheerio. Bye-bye.